Hi, good morning. Welcome to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Last week, Nifty gained 1.3% while Sensex was up around 1.5%. BSE Midcap and SmallCap moved up with gains. Indian stock markets again this week remained concerned about growth prospects, even as inflation continued its downward trajectory both globally and domestically. Global markets were mixed last week as concerns around global growth increased, even as inflation moderated in the US. Indian stock markets witnessed a pause in the recent rally as concerns about the micro outlook weighed over the improving macro outlook. FII flows, that is foreign institutional investor flows, are expected to remain volatile given the concerns about inflation. FIIs continue to be net buyers to the tune of rupees 13,278 crores so far in May. FPI flows in May were mixed for emerging markets, except for India and South Korea. All other emerging countries witnessed outflows. Moving on to some result updates and stock ideas for the week. First is IndusInd Bank. IndusInd Bank is moving towards a more predictable performance. IndusInd Bank reported a solid 50% year-on-year earnings growth, led by 15% year-on-year operating profit growth and 30% year-on-year decline in provisions. Asset quality is broadly comfortable, although improvement has been slower than peers. Loan growth, if you see, is a lot more diversified, and NIM, that is net interest margin, has levers coming through asset mix, and we should see improvement in return on equities here on. So we retain buy on the stock with fair value or target of rupees 1,350. Lastly, our pick of the week is GSPL or Gujarat State Petronet. Its fourth quarter was ahead on lower cost. Shareholder returns are set to improve. So Gujarat State Petronet reported GSPL's reported EBITDA was 7% ahead of our estimates on lower staff cost and marginally higher realized tariff. Volume recovered from third quarter lows amid a sharp decline in LNG prices. With a further decline in LNG prices, we expect volume to recover further in first quarter of FY24. GSPL's pending tariff order remains a key overhang. We conservatively assume a 20% tariff cut from October 2023. The recent Gujarat government policy should improve shareholder returns, like by higher dividend yield, likely buyback. So we reiterate the buy rating on the stock with a revised fair value or target of rupees 380. That's all from my side. Thank you. See you again next week. Signing off.